I'm Isaac Barco from Woolpack Mortgages. We're going to have a look at the support for mortgage interest loan, SMI for short. As a mortgage broker, I know all about it, so let's get into it. If you've got a mortgage and you're receiving certain benefits, you might be able to get help with the interest on your mortgage, or even on loans you've taken out for essential repairs or home improvements to your home. So, who's eligible? So, you may qualify if you own and live in the property, you have a mortgage or a qualifying home improvement loan, and you receive one of the following benefits. So it could be income support, income-based job seekers allowance, income-related employment and support allowance, universal credit or pension credit. Now, waiting times before payments start depend on which benefit you're on. For example, pension credit can trigger payments immediately, while universal credit usually requires 3 months of continuous payments. So what you may get. So in terms of SMI, it covers the interest only, not the capital, arrears or insurance. So it usually covers up to £200,000 of your mortgage or loan. The limit is £100,000 if you're on pension credit, or if you've had certain long-term claims from before January of 2009. The amount is calculated using a standard interest rate set by the government, lender's rate, and the payment goes directly to your lender rather than to yourself. So, for example, if you owe £150,000 on your mortgage and the SMI rate is 3.66%, that would provide about £5,490 a year, which works out to roughly £457 a month. So how is it you can apply? So SMI is linked to your benefit claim. When you apply for a qualifying benefit, you'll be asked about your housing cost. If you proceed, you'll complete and sign an SMI loan form. There's no cost for this. So beforehand, you'll want to make sure you have the relevant information. So your outstanding mortgage or loan balance, your current interest rate, and if applicable, your partner's agreement to sign. So you'll then send the form on to your lender. They'll complete their part and then forward it to the benefit office. If approved, you'll receive a loan offer. You can accept it straight away or later, and payments can even be backdated to when you first qualified. So in terms of how it's repaid, the SMI is a loan, not a grant. It's to be paid in full with interest when you sell or transfer ownership of your home, unless you move it to another property. Interest is added annually until it's cleared or written off. So you can make voluntary repayments at any time with a minimum of £100 or the full balance if it's less than that. So if the sale proceeds don't cover the full loan, you repay what you can and the rest is written off. So for example, if you sell your home for £180,000 and after paying off your mortgage and other secured loans you're left with £20,000, then if your SMI loan's £5,000, it would be repaid from that £20,000. So in terms of the key takeaways, the SMI helps with mortgage or home improvement loan interest on certain benefits. It's a government loan, not a grant, and it's repayable with interest when you sell or transfer your home. It usually covers up to £200,000 on your mortgage or £100,000 in some cases. Payments are based on a set government interest rate, not your lender's, and the money goes directly to your lender, with start dates depending on your benefit. So that's the support for mortgage interest loan overcome.